Just to give you an indication here, we're looking at data up to the end of April 2011. The manager here is what we call SMMI house view, which basically means there's a multi-manager team that looks after this fund. So, Eleni, you'll know that previously we would look at specific managers. So we're looking actually at a team and their performances over here. Formation date is in May 2003, and then the fund size is about at 526 million. TER, just from a total expense ratio perspective, what are you paying? About 1.75% per annum. Now, if we look at the first graph, you're looking at a cumulative graph for this fund relative to its benchmark. And benchmark, remember, is CPI plus 5, which is quite a handsome benchmark. I mean, it's not a small target to try and achieve. And there, if you invested 100 Rand in 2003, you would be worth 287 Rand relative to a benchmark of 221 Rand. And Eleni, let's just quickly look at just some period-specific returns here. Over 24 months, a return of 16.2 relative to a benchmark, and this is inflation plus 5 of 9.7. And over 3 years, 11.6 versus 11. And over 5 years, it's got a nice track record, this fund, of 11 versus 12.3. Let's just look at some relative returns, specifically for this fund. Remember, every week we look at these returns. The blue shaded area indicate the SMM absolute return plus 5% fund minus the actual target here or benchmark of inflation plus 5%. So when you see a shaded area such as this, that means there's underperformance. You read that off that axis on the far side that you see over there. When it's obviously an area such as this, it means it's outperformance. The other line that you're seeing over here is actual inflation plus 5% on a rolling 12-month basis, and that you read off this axis on this side over here. So you see some outperformance from the fund relative to its target or its benchmark in the beginning, and then some underperformance, and then obviously some outperformance on the other side. This obviously goes hand in hand, obviously, with the subprime crisis that we saw playing itself out internationally. Interesting to see how inflation starts building in this period and how the target or the benchmark becomes so much more elevated while most asset classes continue to decrease in price. And then obviously you're going to see this kind of return dynamic that you're seeing over here. Very different to some of the other charts that we've looked at where the benchmark is actually a market relative. And maybe that's a good question, Lenny, to ask Andrew at this stage. We see that the benchmark in this case is inflation plus 5%. Should it not be a target? And what about from a relative benchmark perspective? Should it not be a relative benchmark?
And Cobie, you make a very interesting point because it's something time and time again on WealthQuest that we've mentioned that CPI plus 5 or plus any number is not really viewed as a benchmark but more so as a target. Internal benchmarking, tell us about that.
Yeah, no, we'd agree with you that CPI plus 5 is a return objective. It's typically what we're saying to investors that we're going to try and achieve that level of return over a reasonable period of time, which is over a rolling 3-year period as far as this particular fund is concerned. We don't have an internal benchmark for this fund, and this really just comes back to our philosophy in managing all our absolute return funds, which is essentially when risk is being rewarded, we would like to allow our clients to participate in as much of that reward as possible. And when having risk is not being rewarded, such as in the global financial crisis period, we want to try and preserve capital as much as possible. And that's the whole philosophy behind which we manage these absolute return funds.
Well, when you speak to investors as well, I mean, they say on a long-term basis, on a really long-term basis, the whole point of investment is to exceed inflation.
Absolutely.
Absolutely. Tell us about the plus 5, where you came up with that and why you picked 5%.
Well, we think that a real return of 5% is a reasonable number for an average medium risk type of investor. I mean it's a very loosely defined investment return objective. We have funds that try and target a higher real rate of return for a more aggressive investor and for a lower real rate of return for a more conservative investor. So this is something similar to the average balanced fund.
So asset allocation breakdown, Roland, let's delve into that with you. Equity making a big portion of that, also very heavily weighted towards cash, in fact making up 46.2% of the fund, 35% goes to equity, and then you've got a portion towards bonds and foreign asset allocation as well. Would you say that's a well-balanced fund?
It is. I think over the next few years we're going to, and I'm not an active manager, but I would like to see how Andrew is going to be checking up on these managers because CPI plus 5, as I said, is going to probably in a high inflation environment be quite difficult to achieve. Obviously, you've got time on your side. You know, it's probably a rolling 3-year kind of period that you're looking at, or I don't know, what is the period?
Yeah, rolling 3 years.
because there might be a 1 or a 2 year period where you can't achieve those returns. But certainly the asset allocation at the moment is probably your strategic kind of long-term view, isn't it?
No, it actually reflects also a tactical view. So what we
It's both.
It's both. It's
Okay.
the current asset allocation of the fund is a reflection of our underlying managers, their tactical view, their strategic view, if they have one, as well as our overlay on top of that, really, at the end of the day.
Yeah, so the asset allocation in this fund, as I can understand it, can significantly change depending on how the underlying managers actually change. Because if you look at the underlying managers, those are on plain vanilla type managers. They've got multiple asset classes that they hold at the end of the day. So they can significantly change. So remember that we did a show a while ago on absolute type fund managers and absolute type products.
Yeah.
And remember the definition that we came up for absolute is that there is no definition because it means so much different things to different people. In this instance here, what absolute means, it means an unbridled view, and it's only tactical, and it's trying to achieve this return target by using the very best of manager skill across various
And
asset
I find
classes.
this fascinating because we'd be normally talking about rebalancing of asset allocation, rebalancing of fund managers. Does that happen?
Rebalancing of fund managers and investment strategies.
Yeah.
We have 2 managers in this particular fund that adopt very similar investment strategies, and we allocate amongst those managers as well.